Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, it was a manic Monday yesterday. The Indian benchmark indices ended over 2 months lower spell. We did see both the Sensex and the Nifty fall over 2.5% each. The broader markets, all the sectors, and all in all, over 15 lakh crore rupees worth of investors' wealth was wiped out in a single session. And this was all thanks to the global sell-off that we had seen. But as we begin a new day, there are some signs of a relief rally underway as the Asian markets are showing a sharp rebound, and so is the gift Nifty. And that's what we are hoping to see in today's trading session. Good morning to all our viewers and good morning, Shail.
Good morning, ladies and gentlemen. Without further ado, we'll present to you Mr. Arvind Sanger, Managing Partner of Geosphere Capital, a very long-term watcher of Indian equities and of course has a very strong say as far as overseas markets are concerned as well. Good morning, Mr. Sanger. A very warm welcome to you on Market Today, sir. How do you see this bounce that is now happening on the Japanese markets, and how do you interpret the green tick on US futures? Is this a dead cat bounce or is the worst behind us?
Well, it's impossible to say that the worst is behind us, but it's also, it would be rather bold to say that all it is a dead cat bounce. But, let's examine what happened, right? We've had a couple of days of bad employment-related numbers, which have caused fears that maybe the US economy might be headed for a recession. And so the risks of a recession have gone up. But today in US times, US morning, Monday morning, we did get ISM data for services, and services is the most important part of the US economy. It's over 70% of the economy. And the ISM services all showed positive momentum and positive surprises. So the market avoided the worst of the sell-off and did rebound from its initial horrendous sell-off and ended the day, down over 2%. But, at one point it was down over 3% and even down over 4%. So the market clearly ended up much better than what it had seemed. And S&P futures after the close are also showing a little bit of a rebound. So I think, the global markets are taking the cue right now from what's happening in the US market. And so you're seeing a relief rally, as you mentioned, in Japan, in Korea, in other Asian markets, including the Indian Nifty futures on gift. So I think that, yes, there is a rebound coming, but is it safe to declare that, the volatility is all done, or are there other data points that could cause further volatility? My answer would be, I think more likely the latter, and it makes sense to be, cautious and opportunistic in finding buying opportunities.
Very good morning to you, Mr. Sanger. It's great to have you with us. Especially to make sense of what really transpired yesterday and now what is going to be in the offing. Do you think in hindsight it was a God-sent opportunity for all those who missed the last leg of the rally in the Indian markets?
Look, markets never go in a straight line. So I'm not sure if this is a God-sent opportunity and it's all hunky-dory, or it's a warning not to get too greedy too quickly. My assumption would be the latter, because whether it's the US market or the Indian market, valuations were in the US market and in the Indian market at extremely high levels. They've come back from extremely high levels to high levels. So it's not like markets have gotten super cheap or on a relative basis, great value. But I think, as happens in any market correction, there are always opportunities in individual companies that get oversold where there might be still good unrecognized opportunities. So in that sense, yes, it can be a gift depending on how one uses it. But assuming that it's time to buy anything and everything because it's pulled back and the pullback is over would, in my opinion, be risky to make that assumption.
Right. Mr. Sanger, if you look at the domestic inflows that are coming into Indian equities from local retailers, there's been a sea change over the last 4 years. There was a time when we would sort of shiver with fear if FIs used to withdraw, 4,000, 5,000 crore rupees a month. Yesterday they sold 10,000 crores. It was matched by a similar buying figure by domestic institutions. Do you think in the medium term, say about a month, month and a half, once this crisis is behind us, will Indian markets fall less compared with their global peers and perhaps rebound faster?
I think the domestic flows is something that has clearly been a dominant and new factor in Indian markets in the last year plus, and clearly Indian investors believe in the India story, and I would say have been quite correct in it. So FIIs have come and gone on global cues. Indian investors have been more confident that the Indian economy was on a solid footing, and that confidence has been so far correct. So I don't doubt that if we take a medium-term view, that Indian investors will continue to be the major driver for this market. But that doesn't mean that India's economy, look, let's separate the investors from the economy. India's economy has never been as globally export dependent or integrated as global economies, and that reality is true today. It was true 5 years back. It was true 10 years back. But that doesn't mean that there aren't sectors that are not globally driven, whether it's whether it is the IT companies selling to Western US industry, or it is the Indian metals companies or the Indian chemical companies. There are many sectors that are dependent on global economic growth. So I think I would make the distinction that not every aspect of the market is going to rebound irrespective of what's happening globally. But yeah, I think India has a better domestic growth story than many other economies in the world, many other major economies in the world. And that clearly provides some comfort.
So, Mr. Sanger, in that case, for the retail investors, what would be prudent to do? Should we focus on the domestic-oriented sectors as of now in the next leg of the move in the markets? And do you think will that be a good safe hedge?
Yes, I agree. I think the more domestic-facing, but look, FMCG companies trade at 40, 50, 60 times earnings. So that's a completely domestic-facing sector. But valuation, at least to our mind, are not yet at attractive levels. Right. But there are other sectors within infrastructure, within power, within other parts of the economy, real estate, where there could be leisure travel. There are areas where we could find opportunities which are domestic facing, and yet you don't have to pay quite at least for our point of view, multiples, because the problem is some of the domestic facing sectors, the PE to growth is over 2. Now, maybe we're in a new normal. We have a hard time with a new normal that is quite that valuation, heavy. But even the domestic financial institutions, I think those could be interesting. So there are pockets where we can find relatively okay value. I wouldn't say historically low valuation, but I think relatively okay value, even in a market which overall is not cheap by any stretch of imagination.
Right. Mr. Sanger, coming back to your geography, which is the US, when you look at the muted expectations and guidance that Amazon and in particular Intel has given, it points to probably these CEOs as well as the US Federal Reserve miscalculating the slowing US economy. Do you think now time is ripe for an unscheduled rate cut on Wall Street ahead of September?
Well, on Wednesday, when the Fed came out with the decision not to cut rates, but the Fed chairman, Mr. Powell, gave a very upbeat outlook that by September they were almost, very high probability they were going to cut. The market cheered. So it didn't look like a mistake on the day that it happened. But after that 2 days of data, which suggested that the economy was maybe slowing more than the Fed, at least on the employment side, because it's a dual mandate, that raised the question of a mistake. Today, the ISM data came out on services, which was better than expected. And this morning, before the data came out, there was a high probability growing that there might be an intermediate cut. Now that intermediate cut probability has gone down. So I think, I don't think it's a done deal that there will be an intermediate cut. It'll be very data dependent. But I think the market is going to be looking at data with, half its foot out the door, investors looking for, either confirmation that things are not slowing down as much as feared, or if data shows things are slowing down as bad or worse than feared, then the market's again going to sell off, trying to put pressure on the Fed to cut. So I think, in my opinion, it's, if you ask me, and I think if you look at the market data, I think it's a less than 50% probability that there'll be an intermediate cut.
Okay, so Mr. Sengar, in this case, even if the rate cut happens by September, what is your own sense? There was this narrative being built up that it could be a larger than expected cut, maybe 50 basis points, and cumulatively by the end of the year, 100 basis points. Are you also looking at that? If that happens, and of course the Indian markets also follow suit, will there be further outflow from the FIIs from the Indian markets then?
No, if the Fed embarks on a rate cutting cycle aggressively, which looks likely 50 basis points, like you said, in September, and over 100 basis points by the end of the year, that actually, if that happens against a backdrop of slowing but not a recession economy, I think it's game on, party time for investors to put risk back on. And in that case, India and other markets would benefit.
Mr. Sengar, of course, this is in hindsight and typically a post-mortem. But this very sharp fall that you see, is it only because of the carry trade unwinding, or is it something more to do with the local problems that Wall Street is facing in United States?
Well, we haven't talked about the carry trade yet, but yeah, the carry trade on the Japanese yen, where it was a one-way street, that started unwinding over a week, 10 days ago. So that was the initial catalyst for some profit taking. But the last 2 days the carry trade had started unwinding a few days ago. But that was additional fuel to the fire when the unemployment data started showing risks of a recession. The Psalms rule, as we are now discovering, got triggered, which is one that has usually been a good indicator of a recession, although not guaranteed, as even the originator of that rule has herself come out and said that it may not be the same this time. So I think the carry trade has certainly contributed. But I'm a strong believer that the fundamental recession risk has gone up, not because of the carry trade, but that has exacerbated the sell-off in the market.
Mr. Sengar, would you moderate your expectations of the global markets growth and Indian markets growth for the rest of the year now? Do you think we have made the top what we had to already?
I would not be sure of that, but I think there's a risk that if the data for economy turns out to be worse than expected, then we could have made the high for the year. I feel more comfortable kind of sticking my neck out on the US market in that respect, but I think we've certainly in that case made the high for the quarter. But if the Fed is cutting aggressively, remember there's a meeting in September, there's a meeting in November, there's a meeting in December. It's possible that we could revisit the highs sometime in the fourth quarter, but I think for the time being, we probably made the high in the U.S. market.
Last question to you, Mr. Sengar, and thank you for so much of your time and patience, sir. If you were to advise a US-based non-resident Indian to deploy fresh money into Indian equities, which are the 2-3 zones that you would prefer he deploy, and how much of that money should come in immediately?
Well, I don't think it's ever a good idea to think about immediately. I think, but if in this environment, I think people should start nibbling and adding to positions. But pick their spots. And as I said earlier, I like domestic-facing, infrastructure-oriented companies, leisure and travel-oriented industries. I like power sector. I like domestic-facing industries, FMCG to the extent that one can find value, or related to consumer, if one can find companies which are at attractive valuations. A sector like cement, let's take as an example. It's a domestic-facing sector. It's not a global sector, as compared to steel, where global markets play a bigger role. So, trying to find those niches where opportunities, can exist. I think those would be some of the areas we'd like.
Okay, well, on that note, thank you so much, Mr. Sanger, for being with us and sparing your time for our India audience right in the morning, to give them a good view of as to how should one really take a back seat, look at the entire situation from a long-term perspective, and not be, in a knee-jerk reaction or in a panic mode just by one day or two. Thank you so much for giving that calm advice to all our viewers and investors who are watching you right here. Hope to have you soon. Soon back on Business Today Television and on Market Today as well. Thank you so much.
Thank you. Bye.
All right, viewers, we will continue to look at how the markets, the trade setup is. We'll be getting you more experts through the course of the day. We are just awaiting Mr. Dharmesh Khan, the head of equity research, Chola Securities, to be with us now to give a sense of how he has assessed the situation as of yesterday and what is the outlook now. I think Dharmesh is already with us. Dharmesh ji, good morning to you. Thank you so much for being with us. Your own sense, what was the thought that went in your mind when you saw everything unfold in front of you yesterday? 700, 750 points lower in trade, 2,600 points gone on the Sensex at one point in time. And how do you see the situation now that you're looking at the GIFT Nifty pointing to a sharp recovery, Asian markets bouncing back as well? So what's going on now?
Yeah, very good morning to you and Shailji and to all our viewers. I mean, it was a very welcome correction which happened yesterday. And the point is, when the market was rallying from say 22,000 to 25,000, we all were howling that there's a big valuation disconnect and it's liquidity which has been driving the market. Now, since the correction is happening, again, the problem is why this correction is happening. And we want some sense of soothing, things to come in. See, any calming effect, if it happens on the back of business development, earnings growth is always welcome. So here the disconnect continues. I mean, if you look at the earnings which has been updated for Q1, 500 companies I have looked into, earnings growth is pretty dismal. It's only 4% year-on-year growth, quarter-on-quarter is a decline. And you look outside the Nifty, XBFSI and XIT, then the numbers are far worse. It's around 8% kind of a degrowth which has happened. And Q1 and Q4 are the main quarters for earnings puller. I'm not saying this because this correction has happened yesterday. This I have been highlighting for quite some time. And it was very hard to justify new counters, new ideas on 2 or 3 year kind of a perspective from valuation point of view. Broader call is still there. Broader call, the market is still up high. But I think this, which has happened yesterday, is not going to settle down in a hurry. If it settles, then again it would be on a backdrop of liquidity. So precarious situation for both investors and traders to trade this market on the long side or on the short side for few days. Because few of the issues which has been hiding, first and foremost is the valuation concern. Second is the geopolitical tension rising up. And now it's multiple countries. I don't know how the currency is going to play out because 20 yen appreciation to our USD is quite significant, and balance of payment, balance of trade, everything gets hit internationally. So that has to be taken care of. So prepare for volatility, better to sit on the sidelines and wait for an opportunity. I am not a buyer of defensives like FMCG or pharma and all. How much money you are going to make on that even if you buy 10-15%, and that is not for what we are here in the equity market. We are here to, get 70-80% kind of a return, say, in 2 or 3 year perspective with business visibility and earnings catching up in the similar fashion. So for those kind of a companies, I think further correction is warranted. At least 5 to 7% or 10% more on index level, then it will become a stay. So we are waiting for events to unfold. We have not initiated or recommended any buy on yesterday's decline. And I think August could be a difficult month. It will have a share of optics, but sustainability of the same is a big question mark.
Right. So, Dharmeshji, does anything change for the retail investor who was deploying their funds before yesterday in several of the sectors that we have been discussing with you? Does anything change in that, investment strategy, or should one continue to be having that SIP strategy, allocate towards the key sectors, stocks that they have been having on their radar? And what are you really looking at now?
Exactly. I mean, nothing has changed. Even after yesterday's decline, the kind of queries and we were having was the same way to deploy and how much to deploy, because people are still sitting on a lot of cash. And yesterday also, I mean, a huge chunk of buying was done into select counters. So SIP strategy is what we have been following, and the same strategy continues. So no change in that outlook and no change in the sector outlook. I mean, the sectors which were darlings of the market before this crash happened continue to be the same, because structurally, long-term perspective, those are the sectors where you will get the delta from the market, and they are, I mean, railway infra, defense, power finance, and to a certain extent you can play metals in the downside with infrastructure. So these are the prime sectors. What we have consciously avoided is automobile space. So there we think the valuations have caught up quite high, and I mean, the vehicles the last 2 years has been very good on the sales point of view, so our base effect will catch up. And with that slowdown we are witnessing, the kind of discount dealers are offering and all. So that is one sector which we have avoided. Otherwise, it's the same 3 4 sectors where the focus is on, and SEP is the method to be into this market for investors.
Got it. Let me now talk to you about a few stocks then. Dharmesh, how would you look at Bharti Airtel, for instance, that reported its numbers? We've seen a slew of brokerage houses reports as well. So Citi has a buy call with a target of 1750. Macquarie has a neutral call with a target of 1280. UBS also has a neutral call, but 1530 is their own target as well. Most of the brokerage houses believe that Q1 was largely in line with expectations, and now that all eyes will be on how the tariff hikes will be in the coming quarters as well. How would you really look at Bharti Airtel now post the earnings?
Such is a clear, I mean, buy or need declines kind of a strategy as far as Bharti Airtel is concerned. 211 was the ARPU for this quarter, but the price hike which they have taken will play out in Q2 and Q3. And that is where the delta in the upward trajectory for increasing ARPUs will come into play. Guidance is for 300 kind of an ARPU, which is still 40% appreciation from the current ARPU levels, and that I think will happen because now even Jio has been taking a price hike, and that was the main player which brought the ARPUs down initially. So things are working in favor of Bharti, and then you have other value unlocking plays like Bharti Nextra into it. So that will also happen maybe in a year or 2 years time frame. So these things will keep the momentum going. Data usage anyways is going, so there is no two ways about that. So we are buyers in Bharti Airtel on decline. Structurally, I think you should be adding on a SIP basis, and valuation wise, let Nextra thing come out in the open, and then we'll do the SOTP based on valuation. As of now, 40-50% return from 2 years perspective looks very likely on Bharti Airtel.
Right. And rightly so, for a company whose first quarter profit has doubled to 4,160 crores, Dharmeshji's views are fantastic. Namaste Dharmeshji, a very warm welcome to you, sir, again. And thank you for your cogent advice that, it's not in 2 days that the market bottoms out. Perhaps August will be in pain. I just wanted to understand at what level. It's very difficult for any analyst to point out individual stock bottoms and of course no one is able to catch them. But on the benchmark, where do you think somewhere in August, maybe mid-August or the third week of August, should the Nifty be for sensible buyers like you to begin purchases?
Yeah, namaste, Shail. I think, see, the 996 was the EPS of Nifty for the year gone by, that was FY24. Initially, we have penciled it around 12 to 14% kind of an EPS growth, which takes it to 1120, 30 kind of a level for FY25. But seeing Q1 numbers, I think a downgrade is possible. So we are waiting for one more week because a few of the Nifty 50 companies have not announced the numbers. Post that, by all senses, it will be 8 to 9% kind of a growth. So that will be close to 1100. So based on FY25 numbers, and once we walk into a December quarter, it will be, you will be discounting FY26, where again a 15 to 17% appreciation is expected. So 1200 EPS for FY26 on a very, very conservative and pessimistic, this is a view. Then the correct level where the bottom will happen is of now. I don't see Nifty falling below 22,000 kind of a level. So 22,000, so 22,500 is the sweet spot where I mean aggressive buy will come into play. So market sometimes plays out in extremes. I mean on going upside it goes into extremes. So I'm expecting and hoping and praying that the same extreme is played out on the downside, so we get a much better bargain. But I mean, best case or worst case scenario is 22,000 on the Nifty level, not below that.
Okay. Another stock that I wanted to draw your attention is Indigo. After they have announced the stretch version, the business class as of yesterday, brokerage houses have again upgraded the stock. JP Morgan maintains an overweight with a price target of 4950 here, and they do believe that the company's initiatives should help Indigo to maintain the dominant market share and the profit leadership as well. How would you look at Indigo now? It's had a good consolidation in the last 1 month or so.
Yeah, and things are flying in favor of Indigo with the way crude prices are corrected, and that's a significant portion of their profitability sensitivity. So, and Vistara has already rolled out this business class and premium economy class version. So, Indigo, it was very much important for them to roll out the same and be relevant in the competition from what the offerings are. So I think it's a good positive move from their end, and they are anyways the market leader, gaining market share traction as well. So you have to play it on a cyclical basis. So declines again, you have to buy out. As a brokerage house, we have never recommended Indigo as a buy or a wealth creator kind of an opportunity. The only reason is the cyclicality and high volatility of the crude oil prices on which its profitability depends. So as an analyst, it becomes very hard and to predict first the crude oil movement and then the profitability of such companies. So right, decline should be bought into. That is how we are playing it out.
Okay, ladies and gentlemen, we have the first quotes on the pre-open trade. It's a green opening, although not to the extent of what the GIFT Nifty suggested. Please keep that in mind. 31 points higher on the Nifty, 24,089. What is pulling the Nifty up? State Bank of India, 2.8% higher. Remember, it got drowned in this global meltdown despite a strong quarter that it had come up with. Okay. How about HDFC Bank? 14 rupees 50 higher, 1630. How about Reliance? Reliance is 3 rupees 35 higher at 28.95. What is Infosys doing? Down 6 rupees 1746. Now, which is the top gainer on the top index heavyweights? SBI 2% higher. Which is the top loser? That will be the key. The top loser for the moment is Infosys, down just 0.33. The Nifty is gathering strength, 84 points higher. What else is pulling the Nifty higher? Hindustan Unilever, 1/3% higher. ITC is flat for the moment. There's a green tick on Tata Motors and L&T. Remember 24,074, where the index was vacillating for hours yesterday, was also the intraday low of the budget day. And there are many other statistics that I'll share with as to why 24,080, 24,000 50 did not break yesterday. Okay, now let's look at top gainers in NSE 500. Okay, I see Triveni Turbine 7.5% higher, 640. You have DLF 5% higher. Let's shift focus to FNO. That will be more critical. Okay. Oracle Financial Services 2.7% higher. Bharti Airtel 3% higher. I am very keen to see what ONGC is doing. Remember, it also came out with its earnings. ONGC at the moment is right there in front of you on the screen. It's trading mildly in the green. What else is gaining ground in FNO? Motherson Sumi, remember it was almost down 9% yesterday. It's recovered 4.5% in opening trades, 183.41. What else is moving? Earnings boy today, Chambal Fertilizers 2.4% higher, 510. Lots of activity on the green side. What we'll do is we will let this settle. So the only takeaway for me is that it's not that kind of a bounce that was being shown by GIFT Nifty, and of course the kind of moves that are coming in the US futures markets, and of course the Japanese market. So we'll be extremely cautious on the long side. In any case, the first view will be on the long side taken after 1 hour of trade. Dharmeshji, your very cogent and practical view that one should not hurry in this time of a market to buy seems to be borne out by these opening quotes. Nevertheless, I am sure you have a list of 4 or 5 stocks that you would have loved to buy 10, 15, 20% lower. If you could just share the names in large cap, mid cap and small caps. What does your research throw up in terms of a good stock to purchase but a bad price at the moment?
I mean, in the banking name, it would be ICICI Bank, and from the public sector space, Bank of India came out with a very strong set of numbers. So, from the financial side, which has been the main, heavy lifter, these two stock or the companies look attractive to me. And if more 5-7% price correction happens, we'll be buying into that. Apart from that, Hindustan Aeronautics, HAL, any decline should be bought into. This year itself, they would be rolling out 4 LCA aircraft to the government, so that I mean Q4 would be great for HAL when they report their numbers. So that is one stock. We have an initiating coverage from a mid-cap space, again from the defense space is DCX system. So that's price has corrected. I think Q1 and Q2 numbers won't be that good, but Q3 and Q4 things will pick up since they have got a very large order from L&T, and the order from other associates like Delta of Israel is flowing in. So that would be the 4th company to look into. And the 5th one would be REC from the power finance sector. So these are the 5 companies, banking play, defense play, railway play, and a power play. So these 5 companies I think should make a good basket to be acclimated on declines and go ahead with at least a year kind of a trajectory or a view.
Okay, and the markets seem to be picking up pace now in the pre-opening trade. 24,178 right now on the Nifty, 120 points higher in trade. So we may be looking at almost a 0.5% uptick as we open in trade today as well. Let's look at a few stocks that were earnings bound and are reacting to their numbers to see how are they opening up in the pre-opening trade. So Deepak Nitrite is one that I was looking at because it's reported a 35% increase in its net profit to 202 odd crore rupees. It's a 0.5% uptick for this one. Let's also look at V-Mart, for instance. The company has turned a profit of 12.14 crores compared to loss in the previous quarter. Yes, there is a 9.8% uptick on the basis of this earning right there. BLS International Services also reported strong set of numbers, 70% increase in their net profit to 120 crores and a 28.5% increase in their revenues as well. So let's look at that one. A 4.3% uptick is indicative in the pre-opening trade. Let's also look at Schneider Electric. On the consolidated YOY figures, we actually saw the revenue up 19.8% to 593 crores for the company. EBITDA, however, improved substantially over 66%. There's a 5.7% uptick on the company, on the stock in the pre-opening trade right after those earnings were reported. Let's look at some weak earnings as well. Tata Chemicals experienced a major decline with the profit dropping about 67.6% to 190 odd crore rupees, and revenue also slipping about 10%. But stock is still flattish with a positive bias, 1.2% higher in trade. Bharti Hexacom is also something that along with Bharti Airtel we need to look at. On a Q-on-Q basis, revenue was up just 2%. And the EBITDA, however, was down 0.2%. Margins came in slightly lower than last year same quarter, last quarter, 45.8% versus 47% earlier. However, the net profit is something that jumped 129%, and that's why probably you see that 3% uptick right here. Let's get in Dharmeshji to address any of the stocks that are highlighted in terms of earnings which impressed you as well.
I think chemical space looks interesting. I mean, if you look at the quarter-on-quarter volume growth, most of these companies have reported the same. And Deepak Nitrite also came out with a good set of numbers. Deepak Nitrite, Tata Chemicals, or UPL. On a volume growth basis, on quarter-on-quarter, things does look like improving. On a Y-on-Y, definitely is not to the mark. So there, I think one should be looking if you want to have a trade and if you want to have aggressive trade. And then Deepak Nitrite and UPL, which reported a couple of days back, looks pretty interesting to me at current levels. So from valuation perspective, and hoping that things will pick up gradually, particularly from the European side. Tata Chemicals also come into play, but we would be avoiding that because soda ash demand from Europe is not picking up. Though the GDP growth has picked up in Europe, Q1 it was 0.5%, Q2 it was 0.6%, which was not expected by most of the commentary makers. So these are the companies which looks interesting from the results which we just highlighted.
Okay, let's look at how the high beta low ticket item space is doing, primarily in the PSU setup. We've had the Nifty settling 140 points lower. Happily we will take it. Now, is this a dead cat bounce? Only time will tell, but for 190 for you on the Nifty. Bank Nifty is likely to start 340 points higher. More importantly, the Nifty 500, which got bashed yesterday, is likely to open 154 points higher. These are the three main ones. Now let's look at the PSU pack. In the green, Hudco 2.9% higher. In the green, metal counter, NLC India 2.65% higher. Shipping Corporation 2.4. I want to mention IREDA 2% higher, 244. Midhani and Mazgaon Dock from the defense space are doing well. How about BEL in the green, Garden Reach still in the red, Cochin still in the red. How about the Adani set of stocks? Okay, Adani Wilmar 3% higher. Remember, this is the FMCG play. 2% uptick on Adani Ports. Adani Enterprises 1.5% higher. Okay, good enough. What we will do is we'll now get hold of Osho Krishnan. He's joined us from Angel Broking. Good morning to you, Osho. Your two stock picks for today, which might outperform the broader market on the upside or the downside.
Very good morning, Shail. Firstly, thank you for having me at the show. Well, now, two topics for the day is approximately for a positional basis. The first one, I have a mixed bet. First one is a buy recommendation. The other one is a sell recommendation. So firstly, from pharmaceuticals and healthcare, we are witnessing still some resilience in the market, even in when the overall market is very weak. So first recommendation is on Alchem Laboratories. Discount is looking very positive. It is also on the verge of giving a symmetrical triangle breakout today, approximately opening around 5400, but I would suggest to wait for some kind of dip towards 5350 kind of a level to accumulate this counter with a stop loss of 5150, and I am expecting a target of nearly 5570 in short term perspective. The other counter is a sell recommendation on Concor. Concor yesterday has given a breakdown. Today again there is an opportunity because it is opening around the zone of 994.95. So there one can look for opportunity to sell Concor with a stop loss of 1020, and on the downside I am expecting a target of nearly 950.
Right, Osho, very good morning to you. Do tell me, how are you going to trade Bharti Airtel and Indigo today? These are the two stocks that we'll be watching out for, among the Nifty stocks, because Bharti Airtel, of course, has come out with the earnings, and Indigo also has strategically announced its business class now. So all eyes will be on these two companies.
Very good morning. Firstly, see, Bharti Airtel technically is looking very positive. Yesterday, it has given a very good figures also. So I'm expecting that overall there can be a decent upsurge looking at this counter. But on the higher end, again, 1500 can be seen as a first resistance for this counter. So one should not be very much aggressive, because overall market is very pessimism is across the board in the market. So one should not be very much aggressive in any of these counters. For investment purpose, yes, Bharti Airtel is looking very positive, but again, 1500 being the resilience, once it crosses above 1500, then one can look to accumulate it from a higher perspective. But for now, I am expecting a range of nearly 1450 to 1500. So buy on dip and sell on rise is a recommendation for Bharti Airtel. Now coming to Indigo, again Indigo, if I have to say, then this counter have seen a decent move in the recent period, but after a consolidation, there has been some kind of correction that can be seen in this counter. But overall, it is still hovering around a comfortable zone. So I expect that in the recent period, there can be a decent upsurge that can be seen in this counter. On short-term perspective, approximately 4450, 4500 is the first hurdle. The time it surpasses these zones, then we can witness a strong momentum coming in Indigo. But for the timing, I assume 4150 to 4450 to be the immediate range for Indigo.
Right, ladies and gentlemen, 134 points higher on the Nifty. What is to be watched in terms of should the Nifty turn down on its way back? The number is 23,920, ladies and gentlemen. If that breaks, then obviously the tide will turn back in the favor of Nifty bears. Now, why is 23,920 so important? This is the average volume weighted price of the Nifty from the low of June 24th, June 24 to yesterday, and that was the most critical point where the Nifty reversed yesterday. So if that gets broken, then obviously things will sort of change back for the red. So we are basically watching the first 1 hour of trade. After that, the call will be taken whether to chase the Nifty up or on its way down. Okay, we have a start, ladies and gentlemen. 220 points higher on the Nifty, 24,291. What's clicking in the green? All 10 index heavyweights are in the green. Infosys 19 rupees higher, 1771. What is HDFC Bank doing? 12 rupees higher, 1628. How about Reliance? 50 rupees higher, 2948. Which is the top gaining stock on the Nifty? Tata Motors. It was bashed yesterday, 6.5% down. Today 3.4% higher, 1052. L&T is the second gainer, 2.2% higher, 3605. Reliance taking it away now, 60 rupees higher, 2951. There is a 300 point uptick on the Nifty, 24,341. The Nifty Bank is 480 points higher. Nifty 500 is 351 points higher, and there is a 1% uptick on the Nifty IT index. Very quickly, we'll check what the advanced decline ratio is saying. 1800 stocks in the green, 230 in the red. We track 19 indices for you, all 19 are in the green. The Nifty Alpha 50, this is the top gainer, 3% higher. The small cap index is 2.3% higher. The mid cap index is 1.9% higher. Out of 500 stocks on the Nifty 500, 480 are in the green. Very quickly, Osho, anything that you would like to do in the first 1 or 2 minutes of trade, or will you wait?
I will definitely wait, because looking at the overall setup, I am expecting that Nifty has started moving on the higher end, but on the higher end, I have a view of sell on the rise. So approximately the bearish gap on the daily chart, 24,350, 400 odd levels is the zone where one should start looking for selling opportunity in the broader market. Because overall, if we look about the US market, then US market has already been in the negative terrain. So I'm not very much optimistic. These kind of momentum will be persisting in the market. Looking at the India VIX, which is hovering around the zone of 20, so there will
Okay.
be strong volatility that can be seen. But I will be waiting for first half an hour to see where the market settles, and will look for opportunities more on the short side rather than the long sides.
Fair point. Bharti Airtel is up 0.77%, 1473. ONGC is up 2.6%, 318. The top traded counter is Tata Motors, 143 crores worth of transactions happening, 3.5% higher. Dharmeshji, your view on the opening tick, 200 points, 250 points higher on the Nifty. How do you see it?
It's a bounce back strategy. I may see a continuation of it for 1 or 2 days more. But to my mind, it's just a bounce back, and one has to be very careful and while nibbling into trades. And if this traction one is to play, then please play with very strict stop losses in place.
Got it. It's a sharp and strong bounce back that we are seeing in the markets. 47 stocks of the Nifty 50 stocks are into the green. The Nifty is over 1.1% higher in trade. It's the mid-caps that is 1,000 points up in trade, 1.8% higher in trade for the mid-cap 100 index. Realty index is moving sharply higher, 2.5% uptick for this one. Remember, this was sharply lower in trade yesterday. And one index that you need to watch is India VIX. That's down 13.2% in trade at 17.6. Remember, yesterday at one point in time it was higher than 50% in a one single day, and probably the sharpest single day surge after many years, after 2015 or 16, is what we saw on the India VIX. So that is also trending lower, 13.5% lower in trade right now. So that is giving us some more comfort. Tata Motors, L&T, ONGC, Adani Ports are the top movers on the Nifty right now. Within the F&O space, you have PFC, you have Samvardhan Motherson. Remember, yesterday the stock was lower by 9.5%. It's back in action today. Godrej Properties and REC, they're also up in trades. The PSU index itself is up by 2.2%. All the sectors are moving higher in trade. Osho, to you, how are you looking at the power finance majors, PFC, REC? Would you take the trade?
See, overall, these two counters are looking very positive to me. Such kind of correction should be looked to bought into for from short to medium term perspective. But for the day, I would rather not buy or give a recommendation of buying in these counters, because again, this is initial first hour. First hour can be seen. We witness a decent bounce back, but we should wait for market to stabilize that whether this will be sustained on the higher basis or not. If not, then better not to get engaged in the buying accumulation for PFC or REC, both the counter.
Okay, got it. Let's look at the broader markets
Right,
to
ladies
see.
and gentlemen.
Yes, Shail, please continue.
Yeah, continue. Yeah, please continue, Sakshi. I just wanted to mark the advanced decline on FNO. You have just 6 futures that are down and 177 that are in the green. That is all that I wanted to mark. Please continue.
Yeah, so the broader markets also throwing up a lot of exciting names in the gainers list as well. You have VMart Retail, of course, that's the earnings bound stock that's now up 12.1% higher in trade. You also have stocks like Gokuldas Exports, Schneider Electric after the earnings, 7% higher in trade for this one too. You have Kitex Garments, Sundram Brakes, those are up in trade. BLS E-Services, remember, after the earnings, that's up in trade sharply, 6% higher. Zomato, let's look at that one. What a sharp move, 5.7% higher at 271 for Zomato right now. Let's get in Dharmeshji into the conversation. Dharmeshji, Zomato for you, after the earnings and the sustained momentum now on Zomato, what would you say?
I mean, the Blinkit deal has actually worked for them, and the path to profitability is they have been able to walk the talk. At the same time, if you look at delivery numbers, they were also a very good set of numbers. So this segment seems to be coming out of age, and the operational break even has been achieved by them. And from here, if you look at even the structure, like the fee structure which they have been built, that has been paying rich dividends to these companies. So Zomato I mean 80-85% of the upside has already been captured from valuation perspective. But I still think since this is a concept stock, traction will continue. And from trading perspective, 15-20% upside is very much on the cards for Zomato and delivery both. So both looks very attractive to me, seeing the kind of revenue structure model they have built into. And this is a workable revenue structure model. And people are now used to it. So you don't have a choice but to order from Zomato or Swiggy, and these guys are here to stay now.
Absolutely. Zomato is now a part of your life. You have to pay the cost to avoid the traffic jams, to avoid the rush on the restaurants, and to eat the same meal at peace in your own drawing room and the dining table. So with that, ladies and gentlemen, let me mark a very important point on the Nifty. At the moment, 24,395. What is the most crucial level to look at? Yesterday's high, which was 24,398. Any move above that will trigger another bout of short covering, but for sensible players, let's wait for the first 15-minute, 20-minute candle to form and then take a view on the Nifty. For the moment, it's a very sharp bout of short covering and an equally sharp bout of buying that is coming in. HDFC Bank is leading the charge as far as the Nifty is concerned. The 310-point uptick is because of Reliance, 35 points, L&T 30 points, Infosys 29 points, ICICI Bank 23 points, and Tata Motors 17 points. What is pulling the Nifty lower? Apollo Hospitals, 0.1% lower. That's the only loser on the Nifty today, 49:1. Only time will tell whether this is a dead cat bounce or a very serious bout of buying. But at this point of time, just look at the all-time highs on the counter, on the market. It is Philips Carbon Black, 400 for you, 4% higher. Granules India from the pharma space, 1.45% higher, and Ajanta Pharma, about 1% higher. Cera Sanitaryware is about to change a digit, actually add a digit. 9,990 Sakshi, 6% higher. I'm also going to look at volume buzzers. Where do you see momentum? Where do you see positive? And where do you see a rise in volume? Okay, Schneider, Sakshi marked this stock 8% higher on a very sharp numbers that have come in, 813. Already 100% of 5-day average volume is traded, 3.4 lakhs. Osho, would you want to comment on Schneider?
Schneider has given it is on a verge of giving a breakout consolidation breakout. Also, it is also on the verge of giving a breakout from the short-term moving average. So this level will be very, very crucial for watch for in Schneider. Near about 810 is the zone. 810, 815 is the zone. If it sustains above the same, then we can witness a strong bounce in this counter from a positional point of view. Near about approximately 40 to 45 point of uptick can be seen in this counter, near about the targets of 860 to 65. Overall, counter has seen a very strong bounce from the 100 exponential moving average, and I am expecting that in the current, with the momentum going on, it can actually test the zone of 860.
Okay, we track 85 PSUs listed on the Bombay Stock Exchange and National Stock Exchange for you. Only 2 are in the red. 83, ladies and gentlemen, are in the green. The advanced decline ratio has improved for the Veta. 1981 stocks are in the green as far as the National Stock Exchange is concerned. Only 177. Remember, this could be a dead cat bounce. We will watch the first hour of trade and then maybe take a call. For the moment, yesterday's high is providing resistance to the Nifty. It's unable to move beyond that. 24,329, still up 227 points. What is India VIX doing? It is still down. India VIX is still down 13%. Sakshi, what are you watching?
A lot of realty stocks that are Giving sharp bounce today. Brigade Enterprises won. It came out with a strong set of numbers, a whopping 268% increase in its net profit to 80 crores. That's jumped sharply to over 4% today. Godrej Properties is up 4.3%. Prestige Estates, DLF, Oberoi Realty, and all the stocks within the sector, they're in fact all into the green as well. Let's get in Dharmeshji into the conversation. 3% uptick for the index as a whole, and the realty stocks are coming back. Do you still find a lot of value in some of the stocks, if not the entire sector right now?
But yeah, I mean, realty as a space is buzzing. Whatever new launches are there, whether it is in Bombay region or in the Delhi side, they are getting sold. Only South has seen some softness coming into play. But again, there the premium or the luxury segment is seeing a good traction. And these are the segments which is insulated from any interest rate kind of a scenario. So there is no EMIs worry out there in the premium and luxury segment where these companies have been working well. So I think in that context, DLF looks pretty attractive over a Realty and Macrotech developers. These are the three companies. If you are holding it for a year or so, you are likely to see decent price action in the stock prices of these companies over a period of 1 year. So having said that, I think they are in the last leg of their valuation-led rally. So maybe 15-20% more upside, and that's the maximum which you can expect from these companies. And then it would be a time-wise plateauing of the stock prices.
Okay, got it. Let's get in Osho here. Osho, anything technically that looks strong on the charts as far as the real estate space is concerned?
From real estate, majority counters have seen some kind of bounce back, but I'm not expecting that it should sustain on the higher end because all the counters have been into a corrective phase from past 2-3 trading sessions. So with today's bounce back, one should even look for selling opportunities in major of the counters from the reality space. For example, I was watching DLF. DLF yesterday has given a very drastic plunge from the zone of 100-day exponential moving average. Today it is almost testing the bearish gap which it has formed yesterday. But I'm expecting that around the zone of 845 to 850, one should look for opportunities on the short side just for the intraday positional, not for the positional basis, but for intraday 845 to 50 should be the zone from where one can expect some kind of again correction in DLF. So I am expecting that overall the reality space can see some correction by the first after the first 1 hour of the trades.
Okay, ladies and gentlemen, let me point out to you companies that are benefiting because of problems in Bangladesh, and no better stock comes to my mind than Gokaldas Exports. We'll see this right there in front of you. The counter is up 88 rupees, 10% higher, and it's snapped a 5-day decline. Is this a record high? Only time will tell. Just let me just check that as well. Is this a record high? Yes, this is a record high. Dharmeshji, we will require your intelligence and research abilities on Gokaldas Exports. How do you see this now from the point of view of the economic turmoil that is happening in Bangladesh? Do you think this is a knee-jerk reaction, or will Gokaldas benefit in the medium term with some business from Bangladesh moving to India on the textile and ready-made garment side?
Yeah, thank you, Sanjay, for the appreciation part. See, I mean, this Bangladesh problem is here to stay. It's, I mean, the developments which has happened there will definitely have a negative impact on the economy as a whole, and international community to take a trust on their entire business ability and how the things are going to shape up. It takes time. So to my mind, as you know, China plus one happened, the same may happen in the textile division for Bangladesh plus one. And people are very swift to move from one country to another. And India has all the capabilities in place. Gokaldas Exports per se has seen a turnaround. So last 2-3 years, I mean, the management has actually, after the new management took over, it has changed the entire business model, and now they are working very fine. So as standalone, they were doing pretty good. And this is a sizable opportunity which will come to them through this Bangladesh fiasco which is happening. And I do think what the developments are very serious in nature, what has happened in Bangladesh. And so that will push the country down at least 10 years down. Then they will go from what has happened out there. So it's not a knee-jerk reaction. I mean, order flow and new order inflow will take time to combine. But the Gokaldas Exports is, better placed from others to take advantage of this situation because they are into garmenting. Maybe Arvind Limited can also come into play because they have been also focusing very hard on the garmenting side from the textile manufacturing. So my interaction with the management did suggest that they will focus hard, and this may again provide a good opportunity for them as well.
Okay, and Gokaldas is not the only stock in the textile ready-made garments business that is doing well. Please keep an eye on Keval Kiran Clothing. Remember, while it might take time for global change on the fashion side to shift business away from Bangladesh and Sri Lanka to some extent towards India, but the markets react quicker and better, and that's the reason why you see these green ticks happening. All is not well, Sakshi. Now remember, the first 15 minutes have lapsed, and good time as any to see the advanced decline ratio. Okay, the maximum was 1980. At the moment, it's 1940, and the losers list is now increasing. It was 171 stocks in the red, now about 244. So the first 15-20 minutes of enthusiasm has lapsed. What is good is that the Nifty is still above its average traded price for the last couple of days. Let us see whether 24,330, 24,300 holds or not. The jury is still out whether this is a dead cat bounce or genuine buying. Sakshi.
Okay, got it. We'll thank you, Dharmesh, on that note for being with us on this special edition and sharing with us all your thoughts as well, and various sectors and the stocks that you have suggested to all our viewers. We'll continue our discussion, viewers, in the meanwhile for the next 25 minutes with Osho right here. Osho, let me ask you on the FMCG pack, Osho. Yesterday, some of the stocks within this space were the only ones that were in the saving grace, safe haven, being seen as that space. Today, again, we are seeing some bounce back coming into fore for Britannia. But is FMCG space looking interesting to you at all?
See, overall from FMCG space, two of the counters which are looking very positive to me is one, HUL, which is having a very strong consolidation phase going on near the 21-day exponential moving average. So I'm expecting that in the recent period, we might witness a very strong breakout in this counter for the higher levels of near about 2,900 levels. The other one is Nestle India. Nestle India is having a turnaround from the 200-day simple moving average. So I'm expecting that Nestle India is also having a potential to give a very decent positional returns in the short term period. So approximately 2640 is the target that I am eyeing for Nestle India and 2900 for HUL. So FMCG space is looking positive. Many counters are looking because in such kind of market, defensive counters like FMCG and pharma takes more of the traction. So I'm expecting that FMCG and healthcare pharma sectors will be having majority buying traction in the recent period.
Okay, got it. Let's get in get in your view on Tata Motors now, the top moving counter on the Nifty, 3% higher right now at 1047. Osho, what's next for Tata Motors? Do you see there is further upside?
See, overall, if I have to only see about the technical aspect, then this is a very strong point where one should try to reaccumulate this counter, or one who have missed the rally in the previous side, they can actually start accumulating this share, because on technical front, it is a saying that any counter which gives a breakout will always retest the neckline. So Tata Motors is retesting the neckline of the breakout zone, approximately 1020, 1040 is the zone. So from here onwards, we can expect a decent upsurge, not on a very short-term perspective, but from on a positional basis, on a gradual move, we can expect a decent move coming in Tata Motors for higher targets of 1120 to 1150.
Okay.
9:36, ladies and gentlemen. It's been an exciting 15-20 minutes of the first trade. People have galloped either to cover their shorts or to take a fresh stance into the market on the long side because of the kind of moves that you are seeing in US futures, as of course in the cash Japanese markets. This is as good a time as any to look at what US futures are telling us. So the Dow futures are up 1% or 390 points. The US 2000, which is the Russell 2000 index, is up 1.5%, and of course the Nasdaq is up 2%. Remember, the Nasdaq till yesterday's close overseas was down 13%, 13.2 to be precise, and it slipped below its 200-day moving average. This is as good a time as any to check what the Japanese market is doing, and that will give you an indication. Remember, in Japan at 11:30 p.m. local India time, the Bank of Japan has called a meeting, and that will be an exciting thing to watch. The Nikkei is Sakshi, hold your breath, 11.55% higher at 34,655. It's a gain of 3,592. Only time will tell whether all is well or not. But remember, we fell because of problems of the currency between the US dollar and the Japanese yen. Because global markets are linked through the liquidity cycle, we fell. Now, where will we end today will depend on how this liquidity cycle pans out and what the Bank of Japan does to ameliorate yen's problems. But for the moment, it's good going. 250 points higher on the Nifty, 24,300 is holding, 5,440 on the Nifty Bank, 350 points higher. And what is best, ladies and gentlemen, is Nifty 500. Remember, this is the broadest measure of participation in our country. 270 points higher, 1.2% higher, better than the Nifty, better than the Bank Nifty at 22,800. Sakshi, what are you watching?
Michelle, the IT space has picked up pace, and I wanted to discuss the entire IT space also with Osho. 1.8% higher in trade right now. Within the IT pack, where are you keeping your attention, Osho? Today, Tech Mahindra, HCL Technologies, they are definitely up by about 2.5% each within the Nifty. Wipro is also pulling up pace. So, of the top 5-6 stocks, you have at least 3 to 4 stocks within the IT pack, which are contributing. Large caps versus mid caps, all of them are now bouncing back sharply in trade. Where do you see the momentum continue?
See, overall, IT space has given a very tremendous rally in the last 3 weeks. So I'm expecting that there can be some time-wise correction phase that should continue in overall IT space. So I'm not very much optimistic in IT space as of now for short-term, immediate or very short-term perspective. But any kind of consolidation for major of the IT space like Infosys, TCS, if they consolidate near because they are hovering near the 20-21 day exponential moving average. So if they continue to consolidate here for the coming 1 to 2 trading session, then we might witness that this can be formed as a base, and in the coming period we can witness a decent bounce in these counters. But for the timing, I am not very much bullish in these counters. Again, I am saying all these things because looking at the US data, which is not very much positive, and it is driven by majority IT indices. So I'm expecting that there can be some kind of consolidation, not negative, because our market is quite bullish as compared to the global market. So I'm not very much bearish also, but I will take time to have a decent evaluation on these counters, and I'm not expecting that there will be a strong plunge in the indices or in the counters. But after the consolidation phase, time-wise correction phase, we can witness another leg of rally in these counters.
Right. So that's the IT pack. How about the metals? Even the metals were in fine fettle, when we look at the last 1 week, 10 days odd kind of a move that we saw. Do you see the strength continuing for the metals pack as a whole as well?
See, from metal space, majority of the counters, the heavyweight counters, are hovering near the 200-day SMA. So I'm expecting that they have a limitation on the downside. So from risk reward point of view and from positional accumulation, one can definitely try to accumulate these counters, because major counters like JSW Steel or Tata Steel, all these counters are hovering just above the 200-day SMA. And historically, 200-day SMA has provided a very strong cushioning to these counters. So I'm expecting that these levels should be acting as a very strong support zone, and one should definitely try to accumulate in a staggered manner from a positional point of view that can fetch them a decent returns in short to medium term time frame.
9:42, ladies and gentlemen. We have just 3 minutes left for the first half an hour candle on the Nifty to be made. This probably will be also a good time to see what are the losers on the Nifty, because in that we will realize what the market is trying to tell us. Okay, top losers in the Nifty, nothing to be worried about. SBI Life was at a record high, down 1/3%. HDFC Life made a fresh 52-week high, down 0.2%. Apollo Hospitals, nothing to be worried about. FNO stocks, top losers, there are 4 plus 4, 8 plus 2, 10. Okay. Now Lupin I wouldn't be worried about because it's the earnings boy. Marico is down 3.7%. Is it worrisome? Maybe, because FMCG led the rally yesterday, and people shouldn't be abandoning that stock. The other losers are anywhere between 0.3 to 0.01%, so nothing to be worried about at all. NSE 500, okay. Now let me highlight the pain point. Both Garden Reach and Cochin Shipyard are down 3% each. This is also the space where the maximum amount of money was made over the last 8.5, 10 months, and therefore you see this profit booking happening. BEML, the numbers were terrible, therefore a 1% downtick. Indian Bank 1.5% higher. So the extent of losses is not high, gentlemen, but is this a list that makes me worried? Maybe yes. The Nifty is now slipping from intraday highs. You have 24,272. Let me just see what was the high for the Nifty today, and then maybe take a call. In the cash markets, the high was 24,382. We are at 271. So we've already slipped 110 points from the day's high. Again, we will wait for the first 1 hour of trade to lapse to take a view on the Nifty. So the high and low so far is 24,190 and 24,380. Any move below that or above that is something to be watched out in terms of sensing a direction. What has hit record highs? Well, PCBL, which is earlier Philips Carbon Black. Let's get Osho's view on this one. Osho, what do you think about this stock for the medium to long term in a market which is in turmoil? A counter is hitting record highs. What do you feel?
See, PCBL has been into a very strong traction of buying, because in the last 2 months we have witnessed that from the zone of 200, 50, 60 around zone, it has surged towards the zone of 400. So there has been a strong traction going on. And in the last 4 to 5 days, there has been strong volumes also that can be seen that has uplifted the counter on the higher zone. So I'm expecting that there can be a decent upsurge that, or it should continue in the recent period. But risk reward point of view for fresh buying is not is not there in the counter. So one should definitely avoid from a fresh point of view. But if someone is already holding a position, then they should continue holding it with a stop loss trailing around the zone of 350, which is approximately 50 points from here onwards. But that is the immediate support that one can eye for in this counter. Overall, the momentum is there, and one should expect, or one should keep riding the momentum till till it persists.
Osho, let me bring your attention to some building material companies as well. There is a sharp move across the board. Look at Cera Sanitary Ware, that's been consistently on a rise. from last few trading sessions. It's again almost 6% higher in trade. Greenply Industries, that's also up by about 6.3%. Again, a stock that's been in momentum as well. Some of the paint stocks are also doing well. Tile stocks are also picking up pace now. How are you looking at this space, and what stocks really look attractive to you on the charts within this space? Is this something that one should keep an eye out on now?
See, definitely these are cash counters, and the recent movement has been backed by very strong volumes. So one should definitely keep a track on these counters because, as you have mentioned, Sera Sanitary has given a very strong breakout on daily and weekly time frame chart, and also has given a very strong flat pattern breakout with volume. So I'm expecting that this should continue on the higher end. There will be a sustenance above the zone of 92 or 9300 odd levels, and from here onwards one can definitely eye for another 5 to 600 points of up rally. So majority of the counters are looking very positive, and they are being driven by strong volumes also. So one should definitely keep these counters in their watch list, and as per the breakout they should keep churning the positions.
Okay, got it. So that's as far as the building material space is concerned, and several of the stocks that are giving good technical bounces at this point in time, and one should be definitely keeping an eye out on. Within the broader markets, the mid and the small caps, sharp recovery in trade today from yesterday's losses, over 1,000 points gains coming in on the Nifty Mid Cap 100 index as well. A lot of stocks that are buzzing. Patanjali Foods is 5% higher in trade. You also have Gland Pharma, that's 4% up. IGL is up in trade. We've already pointed out Deepak Nitrite. Voltas is up by 3 odd percent. Several of the stocks that are buzzing within the mid cap space. Jubilant Food Works is also up by about 4 odd percent in trade. What looks good to you within the broader markets? Have you picked out any mid and the small cap stocks?
Yes, from pharma space, Gland Pharma is looking very positive to me. It has given a very strong breakout just now today only. So I'm expecting that there can be a strong follow buying that can be seen in this counter. The breakout was approximately the zone at the zone of 2150 odd levels. So I'm expecting, and with the kind of movement or a rounding formation which it has formed, so on a positional basis, the target comes at a very higher levels. But for short-term perspective, definitely 25 to 550 should be the target that one can expect in this counter from short-term perspective. So that is the immediate target that one can eye for on positional basis, and overall the counter is looking very positive, and one could actually try to take trade in this counter.
Hmm. 9:49, ladies and gentlemen. So far so good. The Nifty is now sniffing above 24,300. That's good. 273 points higher as far as 273 points higher at 24,331, and primarily it's the same set of index heavyweights which are providing support. Let's again look at the counters that are leading this charge on the Nifty. Infosys 41 points, Reliance 35 points, L&T 25 points, TCS and HCL Tech 22 and 11. Needless to say, the maximum rally is at the moment in IT. The Nifty IT index itself is up 940 points, 39,366. This is as good a time as any to shift to the F&O space and see where we are seeing a built up of open interest, positivity within the IT space. Okay, there's a lot of short covering happening on Birla Soft. Open interest is falling, stock is up 2.7%. Because of the mayhem that happened yesterday, there isn't much demand for open interest, but what is in the green is L&T Mindtree, 2.4% higher, 1.1% uptick in open interest. Naukri showing a 1.1% uptick in open interest. And what's really in the green, Oracle Financial Services and Coforge, both up 3.5% and 3.7% respectively. Birla Soft is doing very well. Remember, it was beaten black and blue yesterday because earnings were not up to the mark, and therefore there was a bit of a sell-off. The counter is at 598 at the moment. There is A lot of activity in the pharma space. Laurus Labs 2.6% higher, a cut in open interest. This is short covering. Granules India is something that we need to check. This is a record high. Osho, any view on this defensive space, especially granules? 2.2 higher at 655. What are the charts telling you?
See, overall for granules, this counter was in a very strong position or has witnessed very strong traction from the zone of 540, 550 odd levels only. And from there onwards, there has been no looking back for this counter. It has kept surging and is now at 655 odd levels. So technically, it has reached the overbought trajectory, but the momentum still persists in this counter. The only drawback that it has came in under the bandwidth, so I'm expecting that now the liquidity should fizzle out in this counter in the coming period. Overall trend remains bullish, and I am expecting that even on the lower end, 620, 630 should be acting as a support zone for this counter, while on the higher end, I am expecting a decent target, not very much aggressive as of now, but 675 to 680 should be seen as the immediate target for granules. So 620 to 675 kind of a zone that can be seen in this counter, and any breakdown below 620 can give some kind of profit booking in this counter.
Okay. Right. So, we'll also pay attention to the primary market space. Akums Drugs IPO is going to be making a debut today. And in the pre-open space, the stock has settled at 725 against the issue price of 679. So about a 7% premium listing is what we are given to understand as far as Akums Drugs and Pharmaceuticals are concerned. Just about a minor uptake, 7% of a premium listing is what you can expect on this one. We'll keep an eye out on how the listing really happens going forward. And of course, remember today, First Cry or Brainbees is going to be opening up for the IPO, which we'll continue to discuss throughout the course of the day, and also the management will be joining us as well. So that is something that we'll bring up to you. A lot of action unfolding within the primary market space as well. Let's look at the markets. What else can we pick up? Adani Enterprises picking up pace, 2.7% higher. Osho, what looks good within the entire Adani basket? Are there any stocks that are coming back on the radar with respect to technicals? Yesterday it was stocks, of course, yesterday it was the entire market was down in trade, but some of the stocks that were making a comeback even before were Adani Wilmar, for instance. Adani Ports were making a comeback. Adani Energy itself has now raised 8,373 crores via the QIP. So the entire space is in focus and is news bound. What looks good to you?
See, from the Adani group, all the counters are into a very strong consolidation zone. None of them are into negative terrain as of now, but only the positive counter that can be seen on the gradual basis. Adani Ports is witnessing a gradual uptick. It is taking support from the 21-day exponential moving average and keeps surging. There has been very low average trading range for this counter, but it is continuing the pace on the higher end. So this is one of the counter which can see a gradual up move in the coming period, and Adani Port among the Adani group is one of the preferred pick from short to medium term time.
Okay, got it. You know what else is picking up pace within the F&O space is Samvardhan Motherson making a strong comeback, 5.5% higher now, trade among the top movers within the F&O space. Remember, this stock was down by 9% yesterday. Auto Ancillary, one of the favorite stocks right there for you, Osho. Any bounce back that could sustain here?
See, overall, again, there has been two major strong resistance for this counter. One is the yesterday's bearish gap, which is approximately around the zone of 190, followed by the 21-day exponential moving average, which is 191. So 188 to 191 is the zone where one can expect some kind of resilience for this counter. So until it breaches the same zone on the higher end, till that time there can be some kind of consolidation that can be seen in this counter. Not very much bearish also, because it is having a very strong support nearby around the zone of 175 to 178. So that should be providing cushion. On the higher end, approximately 190 should be seen as the resistance. So one should try to accumulate on the dips and book their profits near around the zone of 190.
9:55, ladies and gentlemen. It's been a very eventful 40 minutes of trade on the Nifty. we are still able to remain 1% higher. Is this a dead cat bounce, or is this short covering coupled with intense buying by domestic ultra HNIs? Only time will tell. But if the Japanese markets are up 10%, US futures are up to 2.5%, what is the need for us to be in the red? I don't know. Therefore, the jury is still out. Remember, the fight was between US and Japan. We paid the price yesterday, but the cost that we incurred was far, far lower than what the rest of the global markets had fallen. We are getting driven by domestic liquidity. Is this a time to purchase for an intraday or a 1 or 2 day basis? I don't know. But if you are a sensible mutual fund investor, this is definitely the month to put in that one extra SIP. Remember, just 4 days ago, we were at 25,074. We have corrected exactly 1,000 points from that high and are now at 24,329. Can the markets fall from here? Yes, of course they can. But will this SIP make a difference in the long term as far as your mutual fund returns are concerned? Yes, definitely. So Sakshi and I will be giving you 3 mutual fund ideas to invest at current levels. You can start investing in them from now, or you can add an extra SIP to your existing mutual fund portfolio. That would be the best thing to do. Sakshi, yours.
All right, we'll thank you, Osho, for being with us on this very special edition and sharing such wonderful ideas with all our viewers. As always, truly appreciate your time with us. Thank you so much for being with us. And viewers, we'll start to wrap up for the morning edition as of now. Over 1% higher in trade for the Nifty. 24,338, 282 points higher. The Nifty Bank is 4.7% up in trade, so a relief rally that's definitely underway. All the sectors are up into the green, led by Realty, metals, IT space. Broader markets sharply higher, 1.8% of a bounce back for them. India weeks lower by about 14% at 17.48. Within the Nifty, you have Tech Mahindra, Adani Enterprises, Wipro, L&T, Divi's Laboratories, HCL Tech, all of them as the top movers. The downside moves are only limited to just 2 stocks on the Nifty, and that's from the life insurance space, SBI Life and HDFC Life. F&O space, Samvardhan, Godrej Properties, Aarti Industries, Oberoi Realty, Oracle Financial Services are the top movers, while the top drags on the F&O space are JK Cement, Marico, Mahanagar Gas, Gujarat Gas and Dr. Lal Path Labs. But the PSU stocks are also rallying sharply, 1.7% higher. PFC, Steel Authority, BHEL, Concor, BEL, NMDC. You have a number of stocks within the PSU stocks that are also climbing back to recover most of what was lost as of yesterday's trade. We leave you at that. Many thanks for being with us. Thanks and goodbye for now, at least from both Shail and me. But we'll keep on coming back on your screens throughout the course of the day with various earnings conversations and, of course, the IPO chats as well. So stay tuned. There's a lot more coming up on your screens.
Good afternoon, ladies and gentlemen. In our ongoing series to get more clarity on where markets are headed, we are now joined today by Mr. DP Singh. He's the Deputy Managing Director and Joint Chief Executive Officer at SBI Mutual Fund, India's largest asset management company by assets under management of about 10